Today we're diving into a topic that honestly, even if you couldn't care less about tech, is completely rewiring how financial markets are analyzed and how big money decisions are made. I know. A lot of people hear this and get intimidated, or they think it's just a bunch of hype. But here's the reality. Artificial intelligence is rewriting the rules of the game for good. And we're not talking about some far-off sci-fi future. This is happening right now, literally right in front of us.
So let's just address the elephant in the room, right? With all this insane processing power, there's a very real fear going around. Are machines secretly taking over the trading floor? Are human analysts basically dinosaurs waiting for the comet? Well, to figure that out, we really need to look at what AI is actually doing with market data today that we humans physically just can't do.
Okay, let's dive into this. Here's how we're going to break it all down. First up, the AI market revolution. Then we'll look at why AI beats manual analysis. From there, we'll cover the 3 pillars of AI, answer the big question, will AI replace traders? And wrap up with what I call the ultimate trading partnership.
All right, starting with part 1, the AI market revolution. We are officially entering the second era of analysis.
Just 2 years. That's the amount of time it's going to take for the financial markets to completely leave you in the dust if you ignore this massive technological shift. If you brush off how AI is changing the landscape, within 24 months, the market's going to lap you, and you won't even see it coming. Why? Because these models can ingest 10 years of market data in a matter of seconds. They calculate probabilities and map out scenarios that would take a whole team of human analysts days to grind through.
Moving on to part 2, why AI beats manual analysis, or really, how it overcomes our human bottlenecks.
Now, what's really interesting about this slide is the absolute sheer scale of the difference in processing volume. A genuinely skilled human analyst might be able to juggle, 20 to 30 charts at once? And even doing that, you're fighting mental fatigue, cognitive biases, emotional swings. But an AI model? It can effortlessly process over 500 charts at the exact same time. It doesn't need coffee, it doesn't get tired, and it definitely doesn't feel fear or greed. It operates completely free of emotional bias, crunching raw data at speeds that our brains just aren't built for.
But it's not just about raw speed, It's about depth. There was this recent case where a veteran analyst was looking at what seemed like a super clear, totally obvious trend line. But when they ran that exact same chart through an AI model, the machine caught a deeper, secondary pattern that was completely invisible to the naked eye. The human analyst wasn't wrong, necessarily. It's just that the AI could see the second and third layers of the matrix that we simply can't.
So what do these invisible patterns actually look like? It all comes down to deep pattern recognition. AI can spot successive, hidden volume building up quietly in the background across entire market cycles. It can instantly map the incredibly complex relationships between, say, Bitcoin dominance and altcoin movements, or track entirely invisible micro-changes in the derivatives markets. Basically, it connects the dots across mountains of information that a human couldn't possibly link together in real time.
Let's move to and see how this builds. We're talking about the 3 pillars of AI and how it creates the ultimate predictive model. See, AI builds its models by smashing together 3 totally different worlds of data simultaneously. Step 1 is the pure mechanics. That means market data like prices, hidden volumes, and microtrends. Step 2 is sentiment. It essentially reads human emotion by scraping the news, scanning X, tracking Google searches, and digging through Reddit to measure mass fear and greed. And then step 3, which is absolutely crucial in crypto, is extracting on-chain data.
Let's just briefly pause and clarify that jargon for a second. On-chain data is all about tracking the actual underlying blockchain network. It watches the behavior of the whales, the massive players making huge waves in the market. It tracks when dormant wallets suddenly spring to life, or measures huge flows of money rushing into or out of exchanges. It is the raw, unfakeable footprint of where the money is actually moving. When you evenly split your focus between technical market mechanics, mass human sentiment, and that raw on-chain activity, you get this incredible 360-degree view of the market. There is literally no human team on Earth that could manually compile, weigh, and analyze these 3 massive streams of data all at once without missing something huge.
Which brings us to part 4. Will AI replace traders? Let's separate the myth from the reality.
The honest, short answer,
No, but there's a huge catch here. AI isn't going to replace traders, but traders who use AI are absolutely going to replace traders who don't. Think of it like this. Saying AI will replace traders is like saying Excel replaced accountants or computers replaced graphic designers. AI is a tool, not a replacement. But if you're a professional who refuses to pick up that tool, yeah, you're going to get phased out of the industry for sure.
We definitely have to keep things grounded, though, because AI isn't some magic crystal ball. It's incredibly precise, and it's beautifully emotionless during a market panic. But the downside? It is utterly ruthless. It runs strictly on garbage in, garbage out. If you feed it bad data, it will confidently hand you a terrible strategy with a digital smile on its face. It completely lacks real-world gut intuition.
And that leads us to this absolute core takeaway. You give AI thought, AI gives you a new perspective. Our job as humans isn't to crunch the numbers anymore. Our job is to ask the right questions, to provide the initial thought in the framework. The AI's job is to take that framework, smash it against millions of data points, and hand you back hidden answers and fresh perspectives you never would have found on your own.
And that takes us to our final section, Part 5, the ultimate trading partnership, combining human intuition with machine precision.
So the crucial point is that peak performance is a true symbiosis. The ultimate winning formula looks like this. You need human market experience and a deep understanding of mass psychology, perfectly combined with the AI's lightning speed, neutrality, and advanced data modeling. The trader who completely ignores AI is going to fail, but the trader who blindly trusts the machine without applying their own human intuition, they're going to fail too. The real power is in the partnership between the two.
We are standing at a massive historical pivot point right now. Just look at the evolution of finance. We went from pre-internet physical trading floors to the smartphone era where retail trading opened up to the whole globe. And now, we're stepping into the third phase, the AI era, the second generation of market analysis. You don't need to be a hardcore computer scientist to survive this transition, but you absolutely have to learn how to navigate it. So, as we step into this wild new era, I want to leave you with a question to mull over for your own strategy. Which AI feature actually matters most to you? Is it the raw technical price prediction? Is it the ability to read mass sentiment and emotion? Or is it tracking that hidden on-chain behavior of the whales? Take a moment, think about where your own blind spots are, and figure out how this tech could fill them. Thank you so much for joining me on this explainer, and I'll catch you in the next one.